You're listening to a podcast of Master Your Finances with me, Kurt Baker, a certified financial planner professional. Sunday mornings at 9 a.m. on 1077thebronx.com.
Another day, another dollar, and our certified financial planner professional, Kurt Baker, will give you the tips you need to turn that single into a sea of green with Master Your Finances. Whether you have enough to get by or too much in your pockets, Kurt Baker and his weekly guests are here to show you how to manage it all. Master Your Finances is underwritten by Certified Wealth Management and Investment LLC. Now listen up, because it's time to get a hold of those money matters and master your finances.
Good morning and welcome back to another edition of Master Your Finances, presented by Certified Wealth Management Investment. I'm Kurt Baker, Certified Financial Planner Professional, located in Princeton, New Jersey. I can be reached through our website, which is www.cwmi.us, or you can call me directly at 609-716-4700. This week, we are very pleased to have with us Karen Kerrigan, who has spent 25 years as an advocate in education and training leadership and has helped foster U.S. entrepreneurship and global small business growth. She is the president and CEO of the Small Business and Entrepreneurship Council. Kerrigan regularly testifies before U.S. Congress on the key issues impacting entrepreneurs and the economy, and has been appointed to numerous federal advisory boards, including the National Women's Business Council and the Small Business Roundtable. Accolades for Karen's work: the U.S. Treasury's Taxpayer Advisory Panel. Karen regularly meets with the President's Cabinet and key advisors and has led roundtables at White House economic summits and other federal government forums. She chairs the newly formed a coalition of leading small business and entrepreneurship organizations dedicated to advocacy policy, securing access, and promoting inclusion. She has been called America's entrepreneurial envoy and small business ambassador for her extensive work overseas. She's the founding member of the World Entrepreneurship Forum Center for International Private Enterprise and a board member and former chair of the, and Karen has received numerous business and leadership awards, including the Crowdfunding Award at the 2017 Global Crowdfunding Convention for advocacy on crowdfunding issues. In November 2017, the Global IP Center for the U.S. Chamber presented Karen with its Excellence in Advocacy Award. Karen, you're pretty amazing, and I know you're right in the middle of all this that's going on right now with our little setback we had with this COVID-19, and it's affected us all in some way, shape, or form. So I know your specialty is on the business world, and I know you're right there and kind of in the mix, and we'd really love to hear what your thoughts are about what we've been starting to do and what we need to continue to do to try to help all these small businesses that are out there. I know there's a lot to talk about. And right now we just had a bill signed recently here to add additional money, right, to the Paycheck Protection Program was part of it, right?
That's right.
I guess we'll start off by just kind of going over, I guess, some of the basics of the programs, and then and try to define that, I guess, some of the differences between them and which ones apply to whom, so to speak, because I found when you talk to people, it's like they're talking about so many different things. People aren't even really sure what they should be doing and how they should be doing it, right? They're kind of confused. There's so much coming at them. So I thought we'd try to take this step by step and go through each one and how it might apply to different businesses and individuals. So maybe we should start off with the Paycheck Protection Act, if you don't, or Protection Program, I should say, or PPP.
Sure. Yeah, you're right. And so, yes, on Thursday, April 23rd, the House passed the sort of the second tranche of funds, both for the PPP as well as the Economic Injury Disaster Loan Program. And then there were funds for other programs, hospitals, et cetera. The president already signed that bill, which means that, all of those applications, whether they're EIDL applications, that's Economic Injury Disaster Loans. We're going to refer to that as EIDL.
Right.
And PPP loans that have been in the queue, the banks, lending institutions, credit unions, et cetera, can sort of turn that faucet back on and they'll be going into the SBA. But, pretty much the legislation increased funding for these programs, for the PPP program, up to $370 billion in new PPP funding, and $60 billion of that 370 is actually going to be dedicated to credit unions, community banks, sort of local financial lending institutions on the smaller side, so that that can be one way to make sure that the smallest of small businesses, actually get some access to this capital as well. Because if you've been reading the headlines, it's been pretty crazy, right? In terms of the larger size businesses, the public companies, that access mattered in terms of and your relationship, with your bank mattered in getting these funds and being first in line. So
Right.
that is
one of the things that go ahead. One of the things that I've heard a lot of is that there's two aspects of that you're touching on that I think are really important to talk about. One is if you're an entity that already has some type of SBA loan or SBA relationship, you already kind of have all your information in their system, so that makes it really easy for them to kind of continue on with this. And also, it seems, at least from what I'm hearing, and maybe you can correct this, but the larger places were getting these like almost automatically, whether or not they even needed the money. Because part of this is, I think you have to show or demonstrate need for the funds, not just that you have eligible, I guess, right? You're supposed to only take it if you really need it. And then, as you pointed out, these smaller institutions are critical because some of these small restaurants and things that are having trouble have minimal relationship. They may not even have a loan with their local bank. They may not need it until now. And all of a sudden you're telling them, hey, look, we got to start a lending apparatus to try to keep my employees on the payroll long enough for me to get back up and running. So there seems to be a lot happening there as far as it seems to be flowing to entities kind of very quickly to ones that may not really even need it. And then the ones that are really kind of struggling, your smaller businesses, seem to be having a harder time connecting to the system and getting the funds that they need. And it's much smaller amounts, right?
Yeah, and you're absolutely right. I mean, so those really small businesses, you're right, they may not have any type of lending relationship. It may be sort of just a typical type of banking relationship, of, a checking account, et cetera. And, if you read any of the stories in New York Times, CNBC, there's been a lot of folks, media folks covering these stories that the larger banks, their commercial lenders, those with $25 million or more in business, they were providing concierge service, and those big banks were taking care of them first. Now, some of that money, that PPP money, particularly the larger public companies, and there was a loophole. It said pretty much, if you've been economically impacted, by COVID-19, you could certify that, and you can get a loan. So almost every business, right, is being economically impacted by COVID-19 and the shutdowns and the everything that's happening, the restrictions in terms of business activity. But there is sort of what's in the legislation in text, and then there's the spirit and intent of the law. And if you look at some of those big public companies, being economically impacted to them also means like really they are able still to go to the capital markets and raise dollars, right? Small businesses can't do that. So many of them are being asked, and I think many of them will. They've been asked by the U.S. Treasury to return their dollars. And, Shake Shack was the first to say we're returning it. And there's going to be a long, long list of others that amounted to close to $600 million, I believe, in loans, which was quite a bit,
Sure.
That was huge on the public company front. But we noticed with the program, I mean, here's a little bit of the good news. We noticed with the program that as time went by, that as days went by, the average size of the loans got smaller, which means that smaller businesses were actually getting them. Actually, community banks and credit unions, community banks particularly, are doing a great job with their customers in terms of their small businesses and getting them these dollars. So now we're going to have more money. There's going to be some set aside for those local community credit union lending institutions, which will be good. The other piece of this is that the fintech lenders, the Intuits, the PayPals, the Squares of the world, they have millions and millions of small businesses, underbanked businesses among them. And so they are allowed into the program, but they were allowed a little bit too late in that first tranche, Kurtis. You know,
Right.
They were approved, and then the money ran out. So they'll play a big role in terms of democratizing access to these funds. And then hopefully, I mean, not everyone's going to get money. It's going to run out again. But hopefully, you know, we'll have more small businesses, again, the mom and pops, the local businesses that communities depend on for their vibrancy, for their jobs, getting more of these funds. So yeah, that's PPP, and the faucet should turn on really soon since the president signed that. So there is hope. You know, people still should look at options if they're not getting serviced by their bank effectively. You know, go to another community bank or go to a credit union or try a fintech lender, an Intuit, a PayPal or Square, you know, to see if you can get a loan through them. Then there was the EIDL money that was given an extra $60 billion. Gosh, we hope some of that reaches small businesses, Kurtis, because not that many have gotten money. It's starting to flow now. We're hearing from our members, oh, I got some money. I got my notice. I'm going to be getting money. I got a little bit of in advance, which was good. Not as much as was originally promised in the legislation. Again, $60 billion. The problem with that is that millions of businesses, small businesses, applied for an EIDL loan, close to $400 billion worth of loan volume, and we only got $60 billion to spread around. So again, both of these funds will run out, but there is some hope for some businesses and some of the smallest of small businesses, which is a good thing. But you know, there's still other issues with the program that we're working on as well in terms of how it's structured and some of the things that are already outdated, even though the legislation is a month old. And we can discuss those things as well.
Oh, absolutely. And we're coming up on a break, but when we get back, I'll tell you my quick experience, and I'll see how that might flow into what you're talking about with everybody here today. Welcome back. You're listening to Master Your Finances. I am Kurt Baker here with Karen Kerrigan, and we're talking about the CARES Act and some of the funding that's coming through. And I just want to give you kind of an example that we're dealing with. We have a little nonprofit that has no debt, anything like that. We have a banking relationship like anybody would. So I went in and we have a small payroll, and we probably fit in that category where they're like they have like 75% of it needs to go towards payroll. So if your payroll is only, I don't know, our payroll is probably $30,000-$40,000 a year, which is tiny for, you know, an entity, of course, but we're still affected because we go into schools and they're no longer doing programming, and so a lot of things were canceled for us, and we're losing a lot of revenue this time of year. So we were affected. So what I did is I went in initially and just applied to the EIDL loan, right? Because they were going to give you that $10,000 to help you out. And now I'm not even sure, should I also be applying for the PPP? So that's where it's a little bit, I'm a little bit confused because they kind of overlap a little bit, because some of that'll cover just basic expenses. Other ones really focused on the employees, right? Which in our case is a micro loan, essentially. It's going to be a tiny loan.
Yeah. And your experience is exactly like many of our small business members and small businesses across the country. You know, they were applied for that loan and thinking they would get that, $10,000 advance within 2 to 3 days, as was stated in the legislation. And and they didn't get it. And they thought, well, this program is, for me, the PPP really wouldn't be appropriate. I could use this $10,000 advance that will carry me over another month or two, and then see where the economy is and see what else, how much I would actually take out in an EIDL loan once they told me I was eligible and qualified, right?
Right, exactly.
So anyway, so the money didn't come. The rules were changed in that they weren't giving everyone this $10,000. They changed the formula to $1,000 per employee. So that was surprising, to a lot of our members, particularly, again, the smaller businesses, right, that wanted to use this money for other operating expenses, and $1,000 or $2,000 wasn't necessarily going to cut it for them.
Right.
So a lot of those members, they would say, okay, we're going to apply for the PPL. And you're right, for a business like you, that may make sense, at this point in time, Kurtis, as well, because even if you get applied, if you get that, if you're eligible for the EIDL, you hear from them, they put, 1,000, 2,000, 3,000, whatever, into your bank account, and that is a grant, that's sort of grant free. What they'll do is on the PPP loan side, they'll say, oh, did you get an EIDL? And if you got that grant, we'll just subtract that, from what you can actually, what is actually forgivable on the payroll and other expense side. See, so they're trying to make them work together. So we did hear I heard one of my members today said, oh, Karen, the same day, I heard both I got my money in the bank for my PPP loan, but I also got my advance on the EIDL, and I'm eligible for that. So they're going to have to, a larger loan outside of that advance. So they're going to have to take that advance, subtract it from, the forgivable part of their PPP loan. And so that's how they work together. And we've encouraged people immediately when we saw that EIDL program tanking, crashing, changing, that folks should apply for PPP, even though the EIDL might have been more appropriate for their circumstance.
Okay. Well, that's kind of what I was thinking, but I'm glad you verified that, because it seemed a little bit odd the way it was working. And I guess to a large entity, it doesn't seem like a lot of money, but $10,000 or $15,000 does a lot for a small nonprofit.
And that's exactly, not only nonprofit, for mom and pops, for
anybody.
And that is why it was so very frustrating to a lot of our really small members who live in low cost areas, of the country, that this 5,000 or 10,000. I mean, this would really be helpful for the month.
Right. Right.
And so that's why it was very disappointing from our perspective, because we do have members that are very small, and we have others who are very big with 50, 60, 70 million dollars, right, in revenue generation. But so we're hoping that, I'm hoping for you, Kurtis, that with that extra 60 billion injected, that you're in line somewhere up to front.
Well, I verified I'm in line. I just don't know where in line I am.
Yeah. I mean, I'm saying I hope you're up front
so.
to get that, and then. But
what about this 75% ratio for the PPP that we talk about a lot, and it keeps coming up? Is that really a concern? Is it, let's say I have $3,000 a month in payroll, but my rent is $5,000 a month. Can I just use that extra $1,000 towards rent? I mean, we just have to account that out, and I'll have to figure out where to come up with the rest of it. Is that how that works, or what's?
Well, that was not in the legislation. The legislation specifically said, payroll and, rent, utilities. There was no split. There was no, ratio within the legislation. That came up in the rules later by Treasury as a way of, I guess, acknowledging that it would be a huge demand for the program. So they wanted to cut back some way or scale it back so that more people would have access, and there would be more loan forgiveness on the payroll side. But yeah, we're still pushing to change that, Kurtis. We think that's we think businesses should be able to, come up with their, they have different models, right? I mean, So you have a restaurant that is huge brick and mortar, dry cleaners, paying a lot in terms of in high class areas for their storefront. Dry cleaner, tremendous amount of energy. Utility costs are just pretty high. And they may have 3 employees, working in that shop. So this really affects them in an unfair way, and a lot of other businesses. So we're really advocating and saying why this is not in the legislation. Can we switch this back and let business owners decide how they're going to use those money? Because at the end of the day, Kurtis, for a brick and mortar, you need an entity for people to come back to. I mean, that's the ultimate payroll protection program, right?
Oh, that's true. That's very true. And a lot of these small business owners, as we know, some of that payroll is going to the owner, the entrepreneur, who may be willing to sit out a paycheck in order to pay his rent or
That's
her rent,
right.
right?
That's
I mean, they're used to that kind of stress, unfortunately, where if things really get rough, they typically will take their name off the payroll first because they want to make sure they keep their employees there when things are rough.
You're exactly right. Exactly. And that's why, trying to these arbitrary ratios, put so many businesses at a disadvantage. And, some are actually thinking, well, gosh, I mean, if I don't, depending on how the economy plays out, I might go out of business. I got this loan. I'm not going to waste this money. I can send it back. I mean, they're being very thinking this through, and because they don't want that debt, right? Because if it's not forgiven on, the payroll, 75% payroll and 25% other, then it truly does turn into a loan. I mean, it's a low interest loan, but if you're out of business or scraping you get by and starting over, that's still debt that's hanging over you. So
that's another aspect that I think is coming up a lot. People are they first they think it's a grant, then they think it's a loan, and then like, well, is it really a grant? And I there's a lot of confusion about what they're actually signing up for, because I'm hearing some people say in some cases maybe just go get a loan. Don't bother with any of this stuff because you're really just going to get a loan anyway. If you have access to that kind of vehicle, so to speak, because it's not necessarily going to be a grant, right? In some cases.
Oh my, yeah, it is a loan. It is a loan.
Right.
And then you have to prove through documentation that you spent the forgivable expenses. I mean, those expenses aren't forgivable expenses, and that would include the payroll, and the rent, the utilities. So you have to document that in order to get forgiveness for that. So, the bank, pretty much looks that over. You're certifying that these are accurate documents,
mm-hmm.
but it is not forgiven until you provide the documentation that actually shows that you used it, for those forgivable expenses.
Okay. Well, that makes a lot of sense. But I think people need to make sure they really have to document all this, because otherwise they may end up owing something they didn't think they were going to owe. They thought it was going to be a grant. It's not. I mean, I guess some of the I hear like restaurants and things are like struggling because they're like, if I take the loan, some of my employees are actually getting benefits on the other side. And I want to talk about that after the break, because there's incentives to help people that are out of work, literally. But in some cases, I've heard business owners saying, well, they're making more money now not working. So I'm concerned I'm actually going to get them back once things do start back up again. We'll talk about that right after the break. You're listening to Master Your Finances. We'll be right back. Welcome back. You're listening to Master Your Finances. I am Kurt Baker here with Karen Kerrigan, and we're talking about the CARES Act and some of the nuances of what's happening. And it's kind of an ever-changing environment. So you have to really kind of keep up to date with what's going on, because they're literally writing the rules as they're rolling the program out, which is very interesting to watch as it happens. And one of the things that I've heard, as I mentioned before the break, is that some employers are concerned they have people who are now eligible for unemployment temporarily. And of course, we're trying to help them to cover their expenses, because we're not sure when the employer is going to get back online. But the employer is like, hey, I may be back online sooner than you think, but they're now getting this extra benefit from the federal government, which has them making a little bit more money than they're making now, and they may not want to come back. So what are your thoughts about that dynamic that I've been hearing from some of the
it's absolutely correct. And you're right, Kurt. And that was, one of the issues even before the CARES Act passed, that the unemployment benefits and that 600 extra of federal money was going to be a disincentive, for employees to come back immediately. And that's exactly what's happened. And let me just say, first of all, folks can visit our website, specouncil.org, and sign up for our e-news for free, our Small Business Insider. So we put out regular updates on all the moving parts, if you will, and all the new guidance. that
Yeah, no, I
comes.
get them all the time from you.
Good. Are they helpful? I hope. So maybe you can attest to that. We hear that they're helpful. I mean, it does keep
Oh, they
people
are.
up to date, and we try to put it in a plain spoken, language so that everyone can understand it. But sbcounselor.org, sign that up for free. Sign up for free. So yes, that is a big issue in terms of. There's a couple of things involved with this, Kurtis. Number one is bringing people back, but the other piece of that is if you are a business or a nonprofit that receives this PPP loan, you've been, you got the okay from the bank, you've been approved. As soon as that money hits your account, say it hits your account this coming Monday morning, that is when that's the shot clock for the 8-week window begins on that day, Monday, for loan forgiveness. So you have to use the money on the forgivable, for payroll. Obviously, if you're running the businesses, and the other piece of that, utilities and rent and all that. If you're still open, then that's automatic. But your shot clock begins on the day you get the money, so you've got to ramp up, bring people back into the business, and from our perspective, it's just too restrictive. Number one, because if you're in a state like Virginia, for example, where I am, and the stay-at-home orders are going through June 10th, business activity has still been restricted quite a bit. It's like, well, it's a shot clock because on Monday, and if you start bringing employees back, but the economy, is not gaining any type of momentum, and you have to let them back off again, after the 8-week window, it just doesn't make sense, right? So, this was written in March when I think most people thought, okay, this is going to be a window here where people are going to stay home, then they're all going to be back out again. But no one anticipated, I think, one, the cascading and the massive impact economically, and then two, how long this would stretch out. In terms of states, all these restrictions on business. In Maryland, it's indefinite. We don't know. I mean, literally, the government said this is indefinite, in terms of stay-at-home orders and business restrictions. So what we're advocating for is take that June 30th deadline that you have to, you have to do from now until June 30th. You have to choose an 8-week. Basically, your 8-week window begins once you get the money. But we're saying provide businesses with more flexibility. They get the money in their account. Let them take a breather. Let's see how the economy goes. They have it in account. They're not spending it. I mean, if they are on stuff they're not supposed to, they're going to have to pay it back anyway, right? There's no loan forgiveness. But and take that June 30th deadline and either move it to September, or there's legislation out there through the end of the year, through December. There's just got to be more flexibility in this in order to make this PPP and this loan forgiveness piece work for as many small businesses as possible. Did I make that clear, Kurtis? I hope I didn't confuse anybody. But.
No, you did it. You did a great job. No, excellent job. No, it's very interesting, and it's a challenging situation. That is for sure.
Yes, and so we need to, one, change the 75-25 formula, and two, allow for flexibility for businesses to say, okay, my 8-week window is going to start, when the economy starts picking up, and when it makes sense to bring back my employees, and I don't disrupt their lives, and take them off unemployment insurance and then put them back on again, maybe. But they're, like we said at the beginning, it is difficult for businesses to bring back some of these employees if they are on unemployment insurance, if they have a PPP loan, because of what they're being paid now through unemployment, and there is not a big incentive to come back, other than maybe you want a job after unemployment insurance runs out, or you just want to work in general. So yes, it is. It's a problem. It's a challenge for employers.
Well, I appreciate it, Karen. Yeah, so there's a lot going on. I guess there's another program coming out that hasn't started yet. I guess we should at least just mention that. That's, I guess, another phase of this that they have for the larger businesses as well. Is that correct?
Yeah, there's going to be. I mean, the Federal Reserve is doing a Main Street lending program, and it's going to be for any size business up to 10,000 employees, but it could start very small as long as you're profitable. Last year in 2019, pretty profitable. That you can basically get a loan through this program. And we haven't really seen the details yet. We heard it's coming very soon, and perhaps as early as Monday, and we'll see what that looks like. But that's going to be another alternative for small to mid-sized businesses to look into if the PP program as structured doesn't work for them, or they just need another type of loan instrument, or the IDL doesn't make sense because there's going to be no money in that anyway. Pretty soon, that $60 billion is going to go quick, as is that $370 billion in the PPP program. That will be coming out soon, and we're going to be looking at it to see how effective that will be for small businesses. So people can check back sbecouncil.org, and we'll provide all the details.
Well, that's great. I guess another question, do you have any recommendations for other things that maybe the small businesses be doing to make adjustments? I mean, it sounds like we're going to have kind of a new norm as far as how we're doing business, especially if you're a retail operation like a restaurant or nail salon, things like that. We're already seeing changes in the grocery stores and things like that. So any feedback on what businesses are starting to do to kind of make adjustments when we do start to open back up and we do start to re-engage?
Yeah, this is you're right. I mean, this is a current issue, because I know there's the debate of whether to reopen or not, but guess what? It's happening, right? It's happening in 5, 6, 7, 8 states. I mean, Illinois announced what it's going to be doing soon in terms of reopening. Governors and localities are doing it different ways. And so it's all very local, it's very state-based, but it is happening. And, one thing that folks may want to do, visit our Facebook page, SBE Council, Small Business and Entrepreneurship Council. You'll go right there. We had a fascinating discussion about this reopening and what businesses need to do and best practices for being clean, hygienic, sort of this new reality. And that Facebook discussion is currently posted on Facebook. It will stay there. We're going to have another one coming up this coming Thursday, and on May 30th at noon. We're having regular series now. It's called A Lunch on Main Street. But there are best practices emerging in terms of how businesses are going to need to operate. I mean, there's going to be the social distancing. If you're a retail operation and if you have customers, you're going to have to reconfigure that storefront, maybe open it up a little bit, have more inventory in the back. Everything is about 6 feet. Your customers, your employees, face masks, the ongoing cleaning on a regular basis in terms of the wipe downs, giving the customers, they're the ones that will be doing a lot. What can you do to limit the amount of physical interaction between you and the customers in terms of payment? How can you do things, better online, and then move to pickup? Obviously restaurants have adjusted in terms of their curbside pickup and all. I think it's fascinating. Who knows? Maybe we'll get margaritas that we go pick up our retail stuff too, right, Kurtis?
Oh, absolutely. Yeah, that's fantastic. I think we're seeing a lot of the technologies being used more. I know that at least personally, these different video conferencing and different ways of communicating with clients has been kind of accelerated. Things that I would rarely do, I'm now having to do on an ongoing basis. We're going to talk a little bit about that after the break. When we come back, you're listening to Master Your Finances. We'll be right back. Welcome back. You're listening to Master Your Finance. I'm Kurtis Baker here with Karen Kerrigan. We're talking about, I guess, what we call maybe the new norm we might experience after this COVID-19 pandemic that we've been having to adjust to. We're going from being out in society on a daily basis, interacting with people, and now we're all locked down in our homes for the most part, unless we really need to go outside or we're considered one of the essential employees that has to kind of manage our infrastructure while the rest of us are working as much as we can from home. So I guess I've been talking to some different business owners. As an example, I have a person I know. He's a painter, and the restaurant's closed right now, of course, to people dining. So what they're actually doing is they're renovating the dining room, and they're already talking about adjustments they're going to make, understanding that they're really not going to be able to have people sitting literally right next to each other anymore. They're going to have to make some adjustments, and they're actually thinking that way. They haven't really made any determinations, but I mean, they're talking about putting up their wedding tents outside, and they're talking about putting separators and putting different types of things out there so that because to me that's going to be really tough for some of these restaurants who have their economic plan may have a certain number of tables, and now maybe it's going to be down by 20, 30, 40, or 50%. That changes your numbers significantly, especially in a high cost area like in New York City, where there's a lot of volume coming through and everybody's literally on top of each other. So what kind of things have you been hearing about how we might see things differently as we go out as consumers and we interact with some of the businesses that are going to have to make some changes to how we do business?
Well, I think there is going to be, this sort of incremental start. And I think the consumers themselves are going to be a little wary, but I don't know. People talk about long-term transformation in terms of, individuals not wanting to engage. I think we'll get beyond that, right? I mean, I do think we will get back to normal again in that regard. Although there's been a lot of trends that have been accelerated by this in terms of, using technology more, embedding technology. And I think that's great because I think it's preparing small businesses a lot for a world with 5G that is going to have tremendous opportunity for small businesses. And they're really learning now how to use technology in a way that's going to benefit them once 5G comes online, which is going to be extraordinary in terms of giving them tools to do a lot of great things, compete with the big guys, et cetera. But, this whole movement to online, I think, is really interesting. I was talking to one of my members yesterday, and her whole business model has been totally upended. She runs a tutoring business in Northern Virginia. She has 300 tutors that work for her. And it was all face-to-face, one-on-one engagement with students, right? And test preparation to go to college. They went to their homes or in a public place. At first she said, I was so worried. I thought the end was near. And, I was like dying, filling out PPP paperwork. But, then she said, look, I'm just going to move to a total online model. And everything is being scheduled online, done online. And she goes, now, you know what? I'm not just regional. I'm not just Northern Virginia. I am national. I'm a national company. So think about that, right? The transformation in terms of her company just by, just going for moving everything online and then becoming this national enterprise. But I think in terms of the interactions, the retail, the restaurant stores, all of that, small business owners there's going to be a lot of pressure on them because a lot of the governors and the local officials are saying, look, we are counting on our small business owners to use common sense. And the small business owners are going to be ones really on the front lines of building consumer confidence, building elected official and mayor's confidence and governor's confidence, and because they're going to have to do things in a smart and safe way in order, to not have sort of mass reinfections again, and then us to backslide back to where we are. So it's all about employees. I mean, no employee break rooms anymore. And I think the big thing is, empowering your employees to enforce a lot of these things that are going to be needed in stores, right? I mean, wearing masks, 6 feet rule, all these other things. So on our next week, Kurtis, on our website, we've been looking at guidelines across state lines right now, the various ones that governors have put out for their businesses in terms of reopening. And we're seeing a lot of common themes in terms of, safety and what employers are going to have to do, what employees are going to have to do, what customers are going to have to do, whether it's a restaurant, again, a retail place, or these personal service businesses, right? Getting your hair done, your nails done, et cetera. And we're going to be posting that sort of general things we see emerging to help small businesses, to help them in preparation for the reopening, because again, there's going to be a different way of doing business in terms of constantly cleaning and limited interaction and 6 feet. And I mean, there's going to be a different culture within your business, and then anything and everything that you could do online. And that's going to really benefit, again, small businesses once we move to this whole new 5G world, because it's going to be an amazing world for small business. And if they move a lot of their processes online and in the cloud now, they'll be able to benefit from the transformative features and tools of 5G, which should be coming soon in the next year or two. So,
I was going to ask you, next year or two, we expect that. I mean, that's fantastic. I mean, I think you're right. And a lot of these small business owners, in fact, I think, as we know, Georgia was one of the states that just started reopening. And a lot of them, the business owners are actually thinking on their own and saying, hey, look, we're not quite ready. I mean, a national chain, I think it was LA Fitness or somebody like that, was like, okay, I know we're allowed to open up as a gym. However, we're not ready because we don't feel like we've put the measures in place that we can safely reopen.
That's right.
There was a local barbershop, the same reaction. He's like, look, I don't have the proper, PPP for myself, protections for my, and I don't have a way to make sure that everybody that works here is actually not going to infect somebody. So even though they're, quote, allowed to open, I think we're going to have people kind of slowly go back as they feel they're kind of ready. And I believe these guidelines that are coming out, I think we're getting a lot of great expertise out there. And then we have to allow a local business owner some flexibility on how they're actually going to implement it in their place, because as we know, New York City is very different than Oklahoma, right?
Yeah, one size does not fit all.
It's not going to work exactly the same way.
Guidelines, not mandates. I mean, there are going to be, some mandates, and it's great. I mean, a business owner, you're right. It's like, well, I don't have, enough hand sanitizer, or, I need wipe down, cloths, disinfectant cloths. And those, the supply chain is pretty tight on some of the things that I need. And yes, so, I mean, these are all issues that we're bringing up with federal officials, too, in terms of what we need in order to do this safely and cleanly, and what are some of the shortages in the supply chain that are going to prevent, small businesses from reopening in a safe and hygienic way, and some other concerns as well. But yeah, it's great that business owners are, again, it's their responsibility. And the big overhang here in the cloud, Kurt, above all of this is the big concern that many small businesses have, liability concern, of getting sued, either, by a customer or by an employee because they didn't provide that safe and, hygienic environment. And unfortunately, nothing's going to be perfect. That's the reality, even if you do the best you can, right? So, so small businesses, they do have that concern, and why some of them are very cautious about doing this in a slow and incremental way, and we salute them for doing that. If they had the luxury of time, that's terrific.
Is there? I think I remember hearing this on one of the newscasts. Is there a conversation on Capitol Hill about how the insurance industry and the government is going to kind of allow us to reopen without feeling like every time I turn around, there's going to be, a plaintiff's attorney that's going to be knocking on my door the next time I make a move, because I'm doing the best I can, but we have insurance coverage, but it doesn't really cover this. And if we reopen and all of a sudden, let's say it doesn't work out, we think we're doing our best effort, and it doesn't quite work out, and a number of people come into my restaurant and get sick, and they're going to file a lawsuit. That's just the way our system works. But is there some kind of thought process about how we can prevent this from becoming a huge litigious situation? Because that's not going to really help anybody other than the ones that are litigating it. Yeah,
you're right. And that discussion is happening, on two things. One, on the insurance industry issue, and, the problems that the restaurant industry and others have with the insurance industry, because they're like, well, this is not, this event, this COVID-19 event is not covered, under the insurance plan, and many of them argue, well, it is, of course, covered. And so there's that issue, and who knows? There might be sort of a government solution to that in terms of some type of pool or fund or whatever to deal with that. But then on the other front, yes, I mean, there is talk of, what type of liability shield, do we need at the federal level? I don't know if we'll get there at the federal level because there's so many competing political interests on that. But I do think you're going to see that emerge at the state level, where you're going to have governors do that on their own. And it may make sense to do that because there's so much other things that they do on legal reform and, other issues that are different state by state. But if you're a business that operates, across state lines, international, I mean, that's an issue in terms of complexity. But I think it's first going to start at the state level in terms of some type of liability protection or shield. But there is definitely talk at the federal level in doing that. I just don't know how they do it without Congress getting back here and being able to debate it. We'll see. We're watching that as well.
Well, Karen, this has been amazing. I know you're a very busy person right now helping us out, but thanks for giving us kind of a summary of what's going on there. And I know it's been very, very helpful. So we very much appreciate you coming on and taking time to kind of give us an update on what's going on. You've been listening to Master Your Finances. We can be reached at www.masteryourfinances.us, and you can hear this podcast as well as all the podcasts there. And remember, together, we can master your finances. You can enjoy financial peace of mind.